Many of you may be looking into investing into Bitcoin, but perhaps not sure which option is right for you. Investing in actual Bitcoin itself? Or through a Bitcoin fund or trust? There are many factors that one has to consider when deciding, and it is important to note that each person will have their own reasons. In other words, there is no one-size-fits-all for this. Before we move forward, please note that this is not financial advice and that each person must do their own research and/or seek a professional financial advisor for assistance. First off, let's start with the pros and cons of purchasing actual Bitcoin. Coin ownership. Assuming you have purchased Bitcoin and are storing it in a wallet in which you control your keys, then you will have full control of these coins. There is no third party that you have to go through in order to gain access to your Bitcoin. Availability to trade. Bitcoin can be traded 24 hours a day, 7 days a week and all year round. Unlike the stock market, there is no waiting for the market to open, or weekend, or holidays to look out for. This is a big advantage for those who like to trade often and enjoy the flexibility. Passive income. By owning Bitcoin directly, there are options to generate income with them. One such option is lending out your coins in exchange for interest payments from a service such as BlockFi or Celsius Network. Lending out your Bitcoin may appeal to investors who want to hold their coins and still get paid. But it also means any changes in the price of Bitcoin will affect your overall income since you cannot trade it while it's being lent out. In general, lending out your Bitcoin for interest is more of an advanced strategy, and will come with added risks, so research and due diligence must be performed. For example, you will be trusting a third party with your Bitcoin, and if something happens to the company, there may be little recourse for you. Direct purchases. With owning your own Bitcoin, you have the option to purchase items or services with it. As Bitcoin becomes mainstream, more and more places are offering Bitcoin as a payment option. Some major companies accepting Bitcoin include Microsoft, PayPal, Home Depot, Starbucks, and Whole Foods. As a side note, Whole Foods is owned by Amazon, and while Amazon does not offer this payment option, who knows what the future may hold. Keep in mind these shops may be location dependent and this option may not be available in your country. Another thing to consider is, if you expect Bitcoin to increase in value, why would you even spend it at all? Please tell us in the comments below. Trade for other cryptocurrencies. If you decide to purchase other cryptocurrencies, you can do so with your Bitcoin rather than with fiat. As Bitcoin is the largest cryptocurrency, it has the most pairings with other cryptos such as Ethereum, Litecoin, Dogecoin, etc., which makes it very convenient when you decide to trade. Ease of transfer. With Bitcoin you can transfer your holdings with ease anywhere in the world. There is no exchange rate to consider, for example, if you want to transfer funds to contacts internationally. Complexity. If you are new to cryptocurrency, the process of purchasing Bitcoin directly may be daunting. There will definitely be a steep learning curve. For example, researching which exchange you would like to sign up for, since this is the most common way for someone to access the crypto market. Each exchange will offer different options to fund your account along with offering different cryptos for you to trade. Some popular cryptocurrency exchanges include Binance and Coinbase, which recently became listed on Nasdaq. Storage and security. With owning your own Bitcoin and having self-custody, you have the responsibility to keep them safe. This means not just from criminals but also from yourself. There are many horror stories online of people losing their hardware wallets or forgetting their passphrases. Once lost, it is virtually impossible to retrieve your coins. Tax sheltering. Depending on your country's tax policy towards crypto, you may not be able to put your Bitcoin into a tax-sheltered account. Please consult with your tax expert to further investigate this. Bitcoin fund or trust. In general, a Bitcoin exchange-traded fund or trust gives you exposure to the value of Bitcoin, without the ownership of actual Bitcoin. Ease of accessibility. Since a Bitcoin fund or trust is traded on the stock exchange just like any other stock, anyone with a traditional investing account at their brokerage can purchase the fund or trust. This means no need to research cryptocurrency exchanges or find additional ways to fund them. And also no need to find a wallet for self-custody. Regulations. Funds or trusts trading on the traditional exchanges need to be regulated and follow more strict guidelines and laws. This means that there's an added layer of protection for the investor. Tax sheltering. Most of these Bitcoin funds or trusts are allowed in a registered tax-sheltered account. This means that even if you incur profits with your trades, you will not be taxed on your capital gains as long as they are kept within your tax-sheltered account. Again, it is best to consult with your tax expert to ensure full compliance with your country's tax laws. Fees. When investing in a Bitcoin fund or trust, there are typically fees that you pay in order for professionals to manage the product. For example, GBTC, a popular Bitcoin trust trading in the US, has a high annual management fee of 2%. Over years, these fees can add up and reduce your earnings significantly. Availability to trade. Since these funds and trusts trade on the traditional stock exchanges, they must follow their hours of operation. In other words, you will not be able to trade evenings, weekends, or on certain holidays. For those who want to trade actively, given the volatility of Bitcoin, this may be a disadvantage. You must weigh the pros and cons of each method and decide for yourself which path you want to pursue. As well, there is nothing stopping you from going with both methods, as long as you do research first. Good luck on your journey and happy investing.